The idea that Lyft stock might be a unicorn is already coming into some serious doubts. Hey everyone, this is Kevin the Apptrepreneur, and as you can see, this is the Lyft stock. It closed at $70. It's up about $1.50 from yesterday, so that's positive. But as you can see in the after trading hours, it's going down again. Now, I don't want to make talking about the stock like a daily occurrence thing. It's not like these videos make a lot of views, and I'm not a stock analyst channel, but there is still some more to the story because Lyft was one of those companies that they called a unicorn. That this stock was going to come out and it was going to get millionaires out of everyone. But you know who doesn't believe in the company's future? I'm sorry about that. Carl Icahn. He sold his Lyft stake prior to IPO. Now, here's the story. Billionaire investor Carl Icahn, I think it's Icahn, sold his roughly 2.7% stake in Lyft Inc. ahead of the ride-hailing company's initial public offering, the Wall Street Journal reported, citing sources. Jonathan Christodoro, a former managing director of Icahn Capital LP, who was on Lyft's board until last month, connected the activist investor with the buyer of the stake, which was worth about $550 million at the IPO price, according to the Wall Street Journal report. Lyft could not immediately be reached for comment. Now that's all there is to it. This guy, who from what I understand, had invested like $100 million into Lyft early on, that's why he has the amount of stock that he does, he kind of decided, you know what, I'm out. This is before it even went public, and I think he might have even gotten more money had he waited for it to go public. I don't know for sure. I assume he knows what he's doing, but he decided, you know what, this isn't for me. I might have initially invested in this company, but not really something I want to get involved in. And he's not the only one, because the company has become one of the most shorted U.S. stocks and pricey to bet on. So here's the article from the Los Angeles Times. A surge in demand for short positions in Lyft Inc., the ride-hailing company that went public last week, has made it the most expensive bearish bet in the U.S. equity market. Tuesday was the first day investors were able to borrow shares to settle short sales, and the interest cost of funding of a new short stake rose 100%, according to the IHS Markit. That makes Lyft the most expensive borrower U.S. stock with more than $5 million in balances, Markets Director of Securities Finances Samuel Pearson said in an emailed statement. In the overnight settlements report, 6.61 million shares were reported on as loan for a market value of $455 million, according to market data. Lyft is now down 1.4% from its initial public offering price of $72 and has a market cap of roughly $19.7 billion. Well, so much for it being worth $25 billion. Short investors have, however, seen much worse. Earlier this year, the price for shorting the cannabis company Tilray Inc. shot through the roof, with the borrowing cost soaring as high as 900%. Since then, Tilray shares have fallen 20%, even though the stock is up nearly 275% from its July 2018 IPO level. While Lyft has made its debut amid much fanfare on Friday, the shares mostly lost some steam and have fallen below the IPO share price as more cautious voices emerged. On Tuesday, Lyft received its first sell rating from Seaport Global analyst Michael Ward, who said that its current valuation required a big leap of faith from investors and reflected an overly optimistic view of consumer behavior in the U.S. Now, here's the thing. Before we continue with this, I probably should have brought this up, but what does it mean to short? So, short a stock. What does it mean to short a stock? According to the U.S. Securities and Exchange Commissions, a short sale is the sale of a stock that an investor does not own, or a sale which is consummated by the delivery of a stock borrowed by or for the account of the investor. Short sales are normally settled by the delivery of a security borrowed by or on behalf of the investor. The investor later closes out the position by returning the borrowed security to the stock lender, typically by purchasing securities on the open market. Investors who sell stock short typically believe the price of stock will fall and hope to buy the stock at the lower price and make a profit. So it's not a kiss of death per se to short a stock, but it's not a vote of confidence either. It kind of suggests that they see some value in the company at one point in time, just not at this price, and typically for a much lower price. So that's not that's not great. Now let's continue to this. According to, oh, for Pete's sakes, you gotta love ads. Continue without unlimited access. There we go. According to financial analytics firms S3 Partners, short sellers had gone into overdrive over the last 3 trading days and shorted more than 38% of Lyft's 32.5 million share float, making it the 27th largest domestic stock among companies with greater than 50 million worth of short interest. That's not good, by the way. We can expect Lyft to be a significant short in the market for a long time, especially with analysts already posting sell recommendations less than a week after its IPO. S3's Ihor, I don't know how to pronounce that, wrote in a report. Activist Wall Street investor Carl Icahn sold this. Yep. Well, okay, we already know that. So anyway, the Lyft stock reputation is not great. Now, again, we don't know if this means it will ultimately be a successful stock. It very well might. There are many companies, and I've even listed a few myself, like, Priceline and Facebook, that started doing very, very poorly and ended up becoming, well, unicorns. They got very, very big. So here's the thing. If the Lyft stock gets cheap enough, it might not be the worst idea to get some stock. If it gets down to $10, $15 a share, maybe even $2 a share, I could see myself putting a couple $100s into the stock. Because here's the thing. If it goes under, okay, whatever. Didn't lose a whole lot. But if it goes up, like if it gets to the $100, $200, $300 mark, then I might be pretty happy with that. So there is still potential in the company. However, again, we are talking about a company that doesn't make money and loses millions, and they're gonna have to be way more transparent. I was talking to Dark Road Run earlier before I started recording this video, and he and some friends are predicting about $40 a share in a few months. Now, they're not stock experts by any means, but what they're basing that on is that before then, Lyft will have to release their first earnings report as a public company. And despite them being very, very open about it, like, hey, we're not making money, and we have no intention of making any money anytime soon, investors are going to look at that and they will get spooked. They will. And that will inspire selling off. And there will probably be at least a few reports of losses, and there will, as a result, probably be few rounds of selling it off. So Lyft's going to actually get pretty low at some point. Now, the current plan, I don't know why I'm getting all these emails all of a sudden. The current plan for me is come April 12th, whatever the stock costs, I'm going to buy at least 1 share, maybe 2 if it's cheap enough. And then I'm going to wait and see. If it gets to a certain price point, I might buy more in the company. You never know. But, if I'm going to invest a lot in this company, I'm going to invest in very cheap shares. So that, did I say sheep? I hope I said cheap shares. Because that's like the lottery idea. You buy the shares very, very inexpensively and hope that they go up very, very high. But here's the thing. 1 week, they're already on a sell notification, and about 35% of the shares are being shorted. And of course, one of their earliest investors sold his stake before they went public, so that should give you a pretty good idea of what he thinks of the company and their ability to make money. This is not over, and it could get a lot more ugly for the company. And again, I am wondering, what is Uber going to do if this gets too bad? Because if by April Lyft stock is like $50, $40, that's going to make Uber vulnerable. That will make their stock very, very vulnerable, and they might not want to do that. But I am now going to pass the question off to all of you fine folks. Of course, I always ask, did you buy Lyft stock? Did you not? What do you think of this news? Does this encourage you? Does it make you feel a little bit more like, this probably isn't going to work out? Do you plan to invest in Lyft stock after hearing stories like this? Personally, I would love to know. So comment below. Like, favorite, share, subscribe. If you enjoy my videos, consider becoming a Patreon member. It's totally optional, of course, but even as low as $1 a month goes a long way to helping the channel run smoothly. And by the way, we did get a new Patreon member, so welcome, Robert. Thank you for your contribution. And if you want to check out my other channel, the Apptrepreneur Vlogs, I'm starting to post more news and vlog content that's a little bit more on the side than what you see on the main channel. And if you want to talk to me personally and other fellow rideshare drivers and app users, check out the Apptrepreneur Hangouts group on Facebook. You have to be approved to join, but we've been improving most people. So, as long as you behave yourself, you can stick around. And as always, Flame responsibly. Have a good one.